Welcome back to the channel, everyone. Today I want to talk about how Citadel and Ken Griffin have been caught lying once again. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Market Rebellion tweeted yesterday saying that Luna and UST developers say this week's crash was caused by a coordinated attack from hedge funds and the big banks. But then Dan Keeler from Blockworks tweeted saying he was in a call with Blockworks and Citadel had shot down rumours that it was involved in the depegging of Terra and the Luna price collapse. They said Citadel Securities does not trade stablecoins, including UST. And as Tendy Baron said, you've got to love the legal speak used here by Citadel. They said that it wasn't Citadel Securities. But what about any other Citadel entity like Citadel LLC? And Citadel said they also weren't trading stablecoins. But what about shorting Luna and Bitcoin and derivatives of crypto in general? But as Charles Payne tweeted, obviously BlackRock and Citadel have denied trading the catering stablecoin. But importantly, do you believe them? Obviously there is an entire reason as to why hashtag Ken Griffin lied actually exists and was trading for months on end. This wouldn't be the first time that Ken Griffin, Citadel and BlackRock have actually lied. They've done it many times in the past, and therefore it is likely that Citadel and BlackRock actually caused the demise of Luna and UST. So I want to quickly explain what actually happened and how we know that it was actually Citadel and BlackRock that performed the attack. So BlackRock and Citadel borrowed 100,000 Bitcoin from Gemini, and we know that because it appears in their loan book. They swapped 25,000 of those Bitcoins into UST. Now that was all done quietly in anticipation of the attack. And when the time was right, they, as in BlackRock and Citadel, called up Do Kwon, the founder of the Terra Foundation, and said they wanted to sell a lot of Bitcoin for UST. And at the start of this video, I said that Luna and UST developers said that this week's crash was caused by a coordinated attack from hedge funds and big banks. And therefore, Do Kwon, the head developer and founder at the Terra Foundation, confirmed that he did have contact with BlackRock and Citadel. Now, as it was a large trade, they, aka Citadel and BlackRock, told him, aka Do Kwon, that they didn't want to move the market and asked if he'd like to buy their large block of Bitcoin at a discount for UST. Do Kwon then took the bait and gave them a huge chunk of UST and obviously buying their Bitcoin, thus lowering the UST liquidity significantly. And then at that point, BlackRock and Citadel dumped all of their Bitcoin and UST, causing massive slippage and triggering a cascade of forced selling in both assets. Now the real problem and the reason why BlackRock and Citadel actually performed this move in the first place was that BlackRock and Citadel knew that Anchor, which holds a lot of Luna, was a Ponzi scheme because they offered 20% interest. And this crash would obviously trigger more withdrawals than Anchor can pay because obviously Anchor is a Ponzi scheme and doesn't actually generate additional money. These forced withdrawals from investors in Luna and UST and the selling would trigger a massive sell-off in Luna, thus further breaking the $1 peg and wrecking the market further. BlackRock and Citadel can now buy back the Bitcoin cheaply as the price of Bitcoin has crashed and crashed even more this morning, down to nearly $25,000 per coin. Now guys, before I dive any further, I want to talk about something special. People like you and I know the stock market is crashing at the moment and we're looking for investments that are entirely uncorrelated. Maybe you like old whiskies and wines, or maybe you're more of a geek for rare watches, or maybe you've got a keen eye for fine art, but you don't have a casual $80 million laying around for this beautiful painting by Claude Monet. Luckily, a new platform called Masterworks has emerged, which is making investing in fine art a possibility. Their mission is to democratize the art market, meaning you can now own a small share in over 80 paintings, ranging from a Picasso, a Banksy, a painting by Andy Warhol, and many others. Now you may say, Tom, why invest in art? And in case you didn't know, art tends to perform well over the long term, outpacing the S&P 500 by 164% between 1995 and 2021. Art also historically outperforms stocks during periods of high inflation and recession, which is great news considering the stock market looks to be crashing right now. Masterworks is also super easy to use. All you have to do is sign up, select an art piece that you think would appreciate in value, and then wait until Masterworks sells the art piece at auction. Alternatively, you can always trade your shares on the secondary market. And so far, Masterworks has sold 3 paintings, each returning over 30% net IRR, which is internal rate of return, to investors. So what are you waiting for? If you want to invest in fine art, then be sure to follow the link down in the description below and sign up for Masterworks now. And this exact same message was also shared and confirmed by the CEO of Cardano. Charles Hoskinson shared a message which alleges the cause of the price crash of Luna and UST. The message involves a scheme created by BlackRock and Citadel to trigger massive liquidations. And therefore, obviously, BlackRock and Citadel can deny it all they like, but at the end of the day, Do Kwon and the developers said that this week's crash was caused by a coordinated attack. And while this has all been going on, in case you missed it, Coinbase is actually already declining into bankruptcy. This is the Coinbase 2031 loan or the Coinbase 2031 redeemable bond. Obviously, when this loan was issued originally, it would have been trading at 100 cents on the dollar, and it's now, over the last few months, slipped down to 63 cents on the dollar. Obviously, as the Coinbase stock has crashed by over 90% since it's released, things really aren't looking too good for Coinbase, and it also seems that these institutional investors that are lending money to Coinbase would also agree. It's obviously one thing for a stock to fall because stocks fall and rise every single day, but when actual convertible bonds and tradable bonds start falling, that's when it's time to worry. And obviously market experts are saying that the Fed is solely responsible for the current ongoing crash by creating a monstrous bubble. The president of a capital management firm said during an interview with Fox that the monstrous bubble that was created by the Fed has more to go as bubbles have been popping left and right. He said, I know everyone's looking for a bottom or the bottom, and I just really feel the central bank has created this monstrous bubble. You're seeing them pop left and right. It started in early 2021 and it's leading to other things. And he said, I just think there's still more to go. And he said, how much more? I don't know, but you're seeing it in real time. Where, believe it or not, the Nasdaq. 50% of all Nasdaq stocks are down 50% or more, and 22% of Nasdaq stocks are already down 75% or more. Now, there are some users like the Crazy Lady Trader that have been saying this is the slowest crash that she's experienced. Now, obviously, I've been saying that the market is crashing and saying the market would crash since around October, November 2021, obviously when Evergrande or Evergrande originally started to collapse. Therefore, we're already about 6 or 7 months into this market crash, but at the end of the day, a market crash isn't an event that happens over the course of a week. It's something that really takes multiple months to happen and is built up over multiple years. Even though the stock market has been crashing since the end of December 2021, so over the last 4 months, don't forget that Michael Burry started his position shorting the housing market back in 2005 and 2006. And therefore, even though the market crash seems like a slow process, on some days the stock market is up and on some days the stock market is down, I still think that actually in reality, this current crash is happening fairly fast, especially compared to other crashes like the 2007-2008 crash and the dot-com crash before then. Obviously, the dot-com crash happened between 2000 and 2001, so again took a full 2 years for the crash to be completed. I do think the current crash is being very well orchestrated, and that's why we haven't yet seen the VIX spiking above 50. But again, make no mistake, the market is crashing. And now in a weird full circle kind of movement, Citadel Securities has tweeted thanking AMC. They said, thank you AMC. Our teams in New York and Chicago had a great time watching the new Doctor Strange movie on the big screen. Now, I don't know if this is some kind of weird play to sucker up to AMC and the apes, or if they're just shooting themselves in the foot, because this tweet in one basically destroys the entire short thesis. Not only is AMC performing well, but AMC also seems to be opening up entire cinema rooms to group parties, yet another revenue diversification stream. And Citadel has even confirmed that watching movies on the big screen is far better than streaming films from the comfort of your own home. Obviously this morning AMC briefly dipped under that $10 region, but then in the space of 10 to 15 minutes rocketed all the way from around $10 up to nearly $14. That's obviously a 40% gain in the space of 10 to 15 minutes that seems to have come from absolutely nowhere. Obviously in the morning, AMC opened, didn't spike right out of the gates, and actually volume was fairly low for AMC for the first half hour of the trading day. But then all of a sudden AMC broke this area around $10.20 and then absolutely rocketed off, basically without stopping, all the way to nearly $14. It just goes to show that as soon as they accidentally mess up kicking the can, forget to roll over an FTD or forget to roll over some form of married or divorced put, within seconds AMC can rocket ridiculous amounts. Now you may say, Tom, a spike from $10 to $14 isn't really too much, but I think if you think of it in percentage terms, 40% is a very large move. That's the same as AMC running from around $50 straight to $70 in the space of around 10 minutes. Now I do think as the market continues to crash around us, we're getting one step closer every single day to causing the AMC squeeze. The S&P 500 has again fallen to new lows around $386. I do think these margin calls will start coming really thick and fast as the S&P 500 drops below this $350 region and wipes out the majority of the gains from 2021. And obviously when these liquidations start coming in thick and fast, it'll only be a matter of time until these hedge funds are forced to close their over-leveraged long positions and also forced to close their over-leveraged shorts. And obviously when these funds close their over-leveraged shorts, it will cause the AMC and GameStop squeeze. So guys, be sure to leave a comment below and ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.